Retail inflation in India moderated to 6.83% in August after reaching a 15-month high of 7.4% in July as vegetable prices cooled off. Even though inflation has cooled off more than expected, the headline number stays above the RBI's tolerance band of 2 to 6% for the second month in a row. Meanwhile, India's industrial output surged 5.7% in July, up from 3.7% in June 2023. Now, a day after a record high on D Street, mid and small caps experienced a sharp decline, with 90% of stocks closing lower, marking the biggest decline of the year, in fact. Benchmark indices Sensex and Nifty managed to maintain relatively stable. Large cap IT and banking stocks lending support and offsetting some of the losses we saw in the broader market. BSE listed companies witnessed a fall in market cap of nearly 6 lakh crores today, and the Sensex managed to otherwise gain about 94 points, closing at 67,221. Nifty experiencing a modest decline as well, just about flat on close. Top gainers today on the index: TCS, L&T, Infi, Divi's Lab, Ultratech Cement on your charts there. On the downside, BPCL, Power Grid, NTPC, Adani Enterprises and Coal India, some of the laggards in trade. My colleague Sakshi Batra spoke with market veteran Devina Mehra to understand what's next for the Nifty after 20,000. Mehra believes that even after record levels, the Nifty and large caps may continue to reward investors. However, it's time to be cautious when it comes to the broader market.
Wonderful achievement at that on the Nifty, something that we had been waiting for with bated breath. But what's next now? That is the question that comes to the mind for all the investors. I mean, would you turn more cautious, or would you continue to ride the happy wave right now?
Okay, so I had, if you see my social media, I had said end of March that this is time to be invested, and you will miss out, you're more likely to miss out on an up move rather than a crash if you don't invest right now. And of course, it's gone up since then, but I still remain positive on the Nifty and particularly on the large cap space. So, I mean, I always like to take a very long view of things. So if you look at the Indian market, people expect 15-16% equity compounding, because that's been the compounding since the Sensex started. NSE had not even come in by then. I mean, I still remember my interview at the NSE when the NSE was getting formed. So I was one of the founding members.
Wow. Wow.
There was actually a written test and then an interview. So,
okay.
So as far as I said, equities are concerned, that's the long-term compounding, but it varies very widely, not just from year to year, but decade to decade. So in the 80s, if you had invested 100 rupees at the beginning, you would have it would have gone up 7 times in a decade. The 2010 to 20 decade, it went up only 2.3 times, barely beating fixed deposit returns. So that decade, the returns were far below trend. And even this, the 3 years that have passed, we haven't seen any great compounding, primarily because 2022 was such a disastrous year for the global market. So we had only a 12% compounding, so 12.5. So we are still not above the trend line. So there's a risk of a crash is still minimum. Again, the risk of missing out on an up move is more significant.